All right, then let's learn how to analyze the market. So the best thing to do is to always start on the monthly time frame. You need to check at the beginning of the month, the monthly time frame, to see what happened in the previous month, and that will help you work out what you might need to do in the current month. So right now we need to see where price is and where it's heading. It looks like it's going up, so we need to highlight our next area of interest, which is that high, and we will highlight that high as our monthly high so that we know what that line is on the lower time frame. All right, so that's our monthly high. So after we've highlighted our monthly high, we need to see what other area or what other interest do we have on the monthly time frame, and we have a breakout. How do we have a breakout? As you can see, we had price creating a high. Price came up to the high. We had a bearish candle that rejected the high, and then our previous month pushed above, breaking out. So we will readjust our breakout line on the lower time frames, depending on what's going on the lower time frames. But for now, this is what we have. These are our most important areas of interest. So now we go on to the weekly time frame. The weekly time frame is always a good decision to also always check every Monday so that you can know what's going on, because if price is going up on the monthly time frame, it's most likely going to push higher. If price is rejecting on the weekly time frame, it's most likely going to continue rejecting in the current week, if the previous week was rejecting. So you need to see what's going on. So as we said, we will readjust our line. Here we are. All right, so now that we have readjusted our line, what are we seeing on the weekly time frame? On the weekly time frame, we have our breakout, right? We have price retesting. As you can see, the wick came all the way low, right? Breakout, price came to retest, right? So that was the week before our previous week. And what did our previous week do? It created another bearish candle. Now this is an inside candle, and if you remember our candlestick videos, you should know what an inside candle is. So this candle is potentially pushing price lower. All right, because if price wanted to go higher, we should have seen it going higher after this candle went all the way down and rejected. So if price wanted to go higher, we should have seen a low being created around this area and price pushing higher, but it didn't. We have a bearish inside candle, which means this candle might be our rejection candle as our signal, and our previous candle, our last week's candle, the inside bar, might be our confirmation. So how do we confirm that? That's when you move on to the lower time frame. So right now, is you are going into the week here, and you know that it's possible that bearish trades might succeed more than bullish trades. All right. So for some people, they will only enter the markets when they see a bearish setup. So let's go on the daily time frame. Now, the daily time frame is the market that you look at every day. So you need, before you even enter any trade, you need to know what's going on the daily time frame, because however the previous day ended, it's going to work well with what's going to happen in your current day. So we have to readjust our line. We can't just have lines cutting through candlesticks, but now we know it's right here. So now we have our low that's in line with the daily time frame, the weekly time frame, and the monthly time frame. Now, on our area, what else do we have? We have a high that was created as well. So now, what does this tell us? It's telling us that price is going up. All right, price is going up, right? But right now we are in a consolidation, so we need to trade a consolidation. So most people will not trade a consolidation. Only if you're sure of what's going on, then you should trade a consolidation. But now we have prices going up, and then we have a consolidation. So since price is consolidating, what we do, let's break it down to the 4-hour time frame. All right. So for day traders, this is your area. So on the 4-hour time frames, we have our high, we have our low. Our zones seem to be very much in line with what's going on. So if we have our high and our low, we are now just watching what's going on the 4-hour time frame. Right now, price is consolidating. There is no proper direction of what's actually going on. Price is in the middle of our range. So if price is in the middle of our range, we don't do anything. We wait for price to go to a high or to a low, and then we deal with what's happening accordingly. On the 1-hour time frame, what do we have? On the 1-hour time frame, we have a mini zone that was created with a high, right? And then we have a low that has been created. All right. So now, if you are looking for a trade, you're now analyzing what's going on the 1-hour time frame. On the 1-hour time frame, what do we have right now? Right? We have price respecting a low. So if price respected this low, that means it's potentially coming up to our next high. Since price is consolidating, we might as well see it doing something like this, even going on the bigger range. So we have a big range and then we have a mini range inside of our big range. All right, that's what price is telling us. So right now we have a small range. Price broke out. So price rejected, right, signal, and then it broke out. So what you need to do? Retest, right, for it to push higher, since price looks like it's consolidating. All right, the best thing to do right now would not to take any trades. You need a proper confirmation that's actually showing you something. But right for now, we know price is going higher and it's consolidating. All right, in this consolidation, what we have on the 4-hour time frame, we have an engulfing candlestick. As you can see, price rejected this low. We have the same rejection over here, a bearish candle and a strong bullish candle engulfing our previous candle. What is that telling us? It's telling us that price might push higher, and if it does push higher, where is our next high? This is our next high. So if you are seeing it, if you want to take a trade there, you now know. If you go on the 1-hour time frame, what do you see? On the 1-hour time frame, you have a breakout. After a breakout, what you need? You need a retest. Once you see your retest, you then enter your trade in according to the 4-hour time frame with your target that we have highlighted on the 4-hour target. What are we saying? We are saying we want price to make some sort of a retest, right? And then it can push back to our target. We'll put our target maybe around this area, all right? Because now this is a different range. This is a weak range. This is a different range. So we put our target right there. Now that's a day trade. It's now different from someone who's swing trading. This is a day trade. You are expecting the trade to be fulfilled in the same day. All right. If you go on the 30-minute time frame, you can see price is very bullish. So all you need to wait for is for price to create another low. Once price creates another low, that is pushing up. Because remember, price does not move in a straight line, it moves in waves. All right. Let's get the questions rolling and then we can move from there.